Hi everyone, welcome back to this week's Technical Insights. The Dow Jones Index closed Friday above the 40,000 level for the first time in history, a day after hitting that benchmark in the previous trading session. While passing the 40,000 level makes for a great headline, what really matters is what underpins the market. Whether company continues to see sustainable profits, where monetary and fiscal policies are heading, and what the future landscape is for the economic health, especially for employment and earnings, is what really matters to continue to drive these markets. On Friday, the Dow Jones Index average rose 134 points or 0.34% to 40,003 points. The S&P 500 inched up 6 points or 0.12% to 5,303 points. The Nasdaq Composite, however, ended lower by 12 points or 0.07% to finish at 16,685 points. For the week, the Dow Jones Index was up 490 points or 1.24% to notch its fifth straight winning week. The S&P 500 climbed 80 points or 1.54% for its fourth straight winning week, and the Nasdaq Composite Index jumped 345 points or 2.11% to also clinch its fourth straight winning week and its longest winning streak since February. In Asia, the Hong Kong benchmark index rose 177 points or 0.91% on Friday, helping the benchmark index to a 5.38% weekly gain, its fourth straight winning week in a row, after Beijing moved to allow government to buy certain flats, relax mortgage rules, and pledge to deliver unfinished homes. The Tech Composite Index added 40 points or 0.23% on Friday and 4.18% for the week after Baidu and JD.com reported its first quarterly results that exceed market consensus. The results from Baidu and JD.com suggested that corporate earnings may have bottomed out in Hong Kong. Week to date, our STI index followed global market indices higher. On Friday, STI index rose 8 points or 0.26%, and for the week, the index added 22 points or 0.69%. Two of the best performers on Friday were Jardine CNC and DFI Retail Group, rising 1.63% and 1.62% respectively. So let's go to the charts and analyze if both stocks will continue the rebound and rise further in the next few weeks. First, let's take a look at Jardine and Carriage. We covered Jardine and Carriage on the 15th of April video, and we noted that the RSI then was in the overbought territory, and investors and traders looking to buy into this rebound would be better off getting in the 50 days or the 20 days moving average at $25.32 and $24.65 respectively. On 16th of April, the share price hit a low of $25.36 over here, close to the 50 days moving average, which is the amber line that you see here. Subsequently, the share price used the 20 days moving average to trend up again. The share price has now formed a higher high on the 13th of May at $28.28, above the previous 12th April high of $26.94. This is a sign that the new uptrend is forming. The next resistance level that the share price will be testing will be the 200 days moving average, which is the red line that you see here, at $28.58 before testing the year-to-date high in January again at $30.10. On the MACD indicator, it is now showing a slight negative reading, meaning that the uptrend that we see since the low of March is now subsiding. On the RSI, the latest reading is at 58 points. It is still showing healthy momentum as it remains 8 points above the 50-point neutral mark. So for investors looking into getting into Jardine and Carriage, we will reiterate to accumulate near the 20 days moving average, which is the white line that you see here at $26.82, or the blue color line that you see here, which is the 100 days moving average at $26.49, with the target price at the 200 days moving average, now currently at $28.58. Next, let's look at DFI Retail Group. The previous time we covered DFI Retail Group was on the 1st of April video. We concluded that if DFI share price were to retest the upper bound of the long-term downtrend channel at $2.23, traders may consider taking a short position targeting the lower bound of the Bollinger Band at around $1.95 or the year-to-date low at $1.93. On 2nd of April, DFI share price did hit a high of $2.28 and tested the upper bound of the long-term downtrend channel, and subsequently got rejected and slipped all the way down to a new year-to-date low at $1.75 on 19th of April, achieving the target price of $1.95 and $1.93 that we set earlier. Prices then rebound to a high of $2.01 near the 50 days moving average, which is the amber line that you see over here. And it's currently now suppressed under the white line, which is the 20 days moving average at $1.88. Since the primary downtrend channel is still intact, any rebound would likely be a technical rebound, and once it retests the upper bound of the long-term downtrend channel, prices will resume the downtrend again. So we would like to reiterate our previous strategy, and the preferred direction would still be to continue to short DFI retail group once it hit a prominent resistance level. And those levels would likely be the upper bound of the Bollinger Band right now at $1.97, with the 50 days moving average close by at $1.98, the amber line that you see here. And slightly higher, we also have a 100 days moving average, which is the blue line that you see here at $2.03. So the target price would be the lower bound of the Bollinger Band, currently at $1.78, and even the year-to-date low that we observed in April at $1.75. And these are the updates that I have for you this week. If you do find this information useful, do remember to like, share, and subscribe to stay updated with the latest market developments. And I'll see you again next week in the next Technical Insights.